Good afternoon. My name is Scott Redler, Chief Strategic Officer. Welcome to today's recap and look ahead. So futures open lower and then pretty much grinded down all day before finally breaking, two more levels and then just reversing up and closing in the middle end of the range, keeping probably the bulls and the bears both guessing. Anyone who is kind of risk averse like me that set stops at key levels probably got out. And some people who were trying to be short in this range, who added when we broke below it, saying this is it, we're going to fall apart, probably don't have a great average cost either, and maybe covered near the close, or don't know what's going on here because, again, not much discovery today. So, not an easy day to say the least on either side. But if you look at the chart, you'll see that we've been talking about the 2-year range, which we're above, and then we've also mentioned on how once we break below the 8-day moving average, next spot we could touch is the 21-day, okay? And that's what we did. We hit the 21-day moving average. You look close, all in all, if you were short, maybe you use the 21-day moving average to cover. If you are someone that sells strength, maybe you used it as a buy, and ultimately, closed semi-decent, the S&P. So, at this point, maybe the range just expanded. It is August. It is August, and there's not that many players around yet. JP Morgan sent out a note saying, they also think August is going to be a rough month, and you have Goldman doing it and this and that, and here's all the market can muster up. So if you, go to the 5-minute to see how we traded off those lows to figure out, intraday, what you could have done or how you could have seen it. So really, I guess this was after this whole move down. Okay, this was your first, 5-minute bar, right? The 5-minute igniting bar where it took out, traded below the level here, okay, which was that important 2150 level, ignited back, held it, and then gave you another push, and then pretty much held this trend line all the way up into the close, and now we'll see what happens tomorrow. But overall, I guess, they say don't short an igniting bar. This was your first big, powerful bar since pretty much, the open. So that meant something short term. And then you had a little bit of follow through. So anyone who maybe shorted this, covered into that, especially since, you took out this area. But, not easy to say the least. You go to the spiders, 5-minute chart, kind of the same thing. Here was your igniting bar that finally reclaimed the 8 and 21 day. It was below the 8 and 21 day pretty much the majority as it was trending lower all day, and then boom, woke up, came in and held it and pretty much rode it all the way up. So the computers were shorting every time we hit the 8-day and then the 21-day, and then they flipped right here, got long, and rode it back up. And all in all, you go to the 5-minute chart or the daily chart, and as of now, we have a new point of reference to use, which is right here. And we'll see, what happens, how much longer we have to stay here. But again, we are below the 8-day moving average. Some momentum was lost. And so maybe you should have a little less on, even though we bounced back. You go to the Russell, what did that do? Very similar, big wide range bar into the 21-day moving average. So this just engulfed this entire 8-day range. And when you have choppiness like that, sometimes that takes place. So at this point it held. Again, that's not showing me to be long. That's showing me, 8-day broke, 21 days holding the first time we get there. Well, let's see if that can continue. If you go to the Qs, it just for the first time held the 8-day, so it's showing relative strength, still the strongest sector. The 21 days all the way down here, so we shall see. And then the bios with the BIIB news was just like the craziness. Okay, basically it came down to the 8-day moving average. So if you were at lunch and you put a buy somewhere around there, you came back like, wow, I did great. Overall, still, the bios are, where there's a lot of action. The BAIB took off again. Wow. So there's news that it could be a takeover somewhere between 230 and 330, or sorry, 330 and 410. I don't know. Let's see where the highs were of the year. Highs of the year are still a lot higher. So whatever you're doing, you shouldn't be shorted. And usually when news comes out like that and it doesn't pull in after a big move it's already seen, chances are, maybe there's some validity to it. I'm actually in the guild, obviously, the stepsister. I'm in guild. There was some news the other day that they were being looked at by I don't remember who. So I just went out 2 weeks and I bought the 80s, and obviously. The news wasn't in with that, it was with PIB, but whatever, options are risk is premium paid. That's why I would never be in a stock that's below the 200-day, that's trending lower, that's near lows. But if you're playing it for a new situation, you buy a few calls and give it a few weeks, because if there is some kind of talk about it, usually if it's real, they have to be done within 3 to 5 days. And if they're not done in 3 to 5 days, then it was just, talk amongst, all the rooms. Not a great close anyway. So then let's talk about the stocks that we trade, with a lot of the high beta names. Now Apple, gave us a really nice 3-day methodical trade. Pulled in a little bit more than I would have thought, got me out of it. I actually tried to be so careful with it. I sold into strength yesterday, came in, I waited. I'm like, let me buy 105.05s and wait. And then it went all the way down to 104. So when it broke, I'll show you how I treated it. Everyone's like, Red Dog, how did you treat it? Because I know you bought here, added here, sold there. So how did you get back in it? So, the reason why I said 104, 55 is because it was basically this high and this low, and figured it should hold there. And I wound up doing it. So on a 5-minute chart, I waited. Okay, so if you look here, 5-minute chart, here was your high, okay, the prior day. So I figured I would give it the first chance here to be safe. So I bought it into this 105.5. Okay, didn't work. I added into the 104 is the 104.55. It was like, I think right around here. What's this low here? The low here was, no, this was 104.75. That was actually the pivot low, came back, retested. Really, it was right here. Okay, there was your 104.55. So this is where, I added again. So came in like in less than it, like almost tier 1. Okay, bought a little bit more here to get back to full position almost. Added to tier 1.5, and then I said if this breaks 104.50, I'm out of my stock. So basically, it came up, stopped me out, went down to 104, and then came up, and it's a little wishy-washy, but still it's okay. So what I did is the 20% of options I sold, since I do still think, come September, that this isn't the end of the world, that it could, be into that 108, 112. I bought September versus mid-August options. I bought the September, 105s. So I have like the third week in August, 105s that we made some good money on, and I have 2/3 left, and then I bought into weakness the Septembers just to have it on. So we'll see if the 200-day winds up holding, goes sideways and continues, or was this some kind of breakout failure trap. Hopefully that's not the case. We'll see. Facebook was really erratic off the open, so difficult. I came in long, I added when it went green, and then I added a little bit when it went above the prior high, and then as soon as it flashed down, I got out of some, and then once it broke below the prior low, I got out of more, and now it's it came off those lows, but sold off on earnings. Lower high, I'm going to be careful with it. It could see the 21-day. It could see this prior level here. So, I'm going to just be more careful. It didn't build on yesterday's candle, which it could have. It could always do it, but it didn't. So, it wound up being a hard trade. I lost money there. Netflix opened lower and really didn't do much. All in all, though, it kind of held where it had to. There was some news that they're going to get something in China, or some kind of joint venture in China. I was going to take it long overnight, but I decided against it. I'll wait to see if it hangs out in here and goes again. I just didn't want the risk overnight for many things. Still below the 200-day, hanging out, but it's nothing so special. Amazon still above the prior breakout, so not much there except for it didn't break down. Day in the life in Amazon, needs some time here. Google, let me just get a little closer for you. Google actually was a little stronger all day. Here you are still hanging out, above the prior high of 755, so not the end of the world there. And Google, actually pretty, nice little green bar right there, and still above the 8-day, so it's letting them play catch up, just not that fast. What the 8-day and the 21-day do is they let you figure out the speed. If something's riding the 8-day and it bounces off every single time, it's fast, it's furious, they don't let you get in. If something breaks the 8-day, it doesn't mean it's broken, it just means that it's a little slower. They're not coming in to buy it as fast, and maybe you could see the 21-day or maybe you could see the 50-day. So that's how we use those moving averages. Then you use gaps, where if you protect the gap, there's shorts trapped, you can't buy it pulling, and usually that keeps it moving faster. If it starts trading into a pro gap, then it just means that it needs more time, and you better be patient and have easier prices. So to close, we'll see what the miners did today. Well, I'm glad at least I told people not to chase the up open. That if you were going to be long the miners, this was your spot to get long the miners right here, or maybe even on yesterday's close above the highs. That could be a little tricky as it's extended from the 8-day. Okay, here you bought it as it pulled into it, and then there is your extended, you sell some. So that's how you try and trade these ranges besides breakouts. Lastly, TLT. You had some downside follow through. Remember when it basically trapped all these people on this day, came down, came off lows, and still very, very choppy. Here was your high. This didn't give me any clues that everyone's like, oh, it's going back to the highs, and then boom, boom. So just take it a little easier there. Things are getting choppy. We are in August. If Goldman Sachs saying sell for the next 3 months, JP Morgan came out with a huge note, 5 pages long on why August isn't going to be great. A few other hedge fund guys. So that's why today, when we had the first potential day engulfing that whole upper range, I'm like, you know what, I'm going to reduce my positions and wait and see, because who knows, maybe these guys are right and we have come a long way, and I'm not going to sit there and be stuck. I'll have options that go out a few weeks if we hang in there and stocks show some kind of resilience, or individual action. But to trade the indices and be all in when I could trade actively, and I don't want to we want to net money every day, we have to be a little bit different. So if today was frustrating because you got out of your longs when we broke Spider S&P 2155 or 2157, and then you were waiting for your short, and you got short when we broke 2150, and then didn't have any downside follow through. That's what happens sometimes in August. That's the life on the range. We'd much rather have follow through. See you tomorrow morning.